We have three main things to chit chat about in this video. Number one, how the stock market right now in real time is breaking some pretty interesting records. Number two, how a Wall Street legend is officially hanging up his cleats, going into retirement. And number three, all the major things you have to pay attention to in this upcoming trading week. We have some major macroeconomic events, we have some earnings, and of course, I'll even give you the stats, facts, and figures related to some seasonality. I hope that sounds good to you. And of course, if you enjoy these type of market breakdowns, don't forget to like, subscribe, all that good stuff. And with that being said, let's rock. When the world's largest casino officially closed on Friday, May the 2nd, here was the headline. Dow Jones 500 points, S&P 500 posts longest win streak in 20 years as stocks claw back tariff losses. It's the second half of that one that I really want to get going with, because if you look at the S&P 500, count them up, 1, 2, 3, 4, 5, 6, 7, 8, 9. We've had 9 green days in a row. The last time this happened was 2004. That is quite the push. And in fact, from the low, we are now officially up 17%. That is a nice bounce. And really, since the craziness on Wednesday the 9th, when we got that announcement from the president that basically everyone's getting a 90-day pause and there's a little bit more tension with China, from that point, we're actually now up about 4%. So granted, we still have a bit of distance to go from the all-time high. We are down 7.5, but I get that. I suppose, to be fair, there's two different ways to look at this. Are you going to look at the glass half full or half empty? Regardless, yes, we are down from the all-time high, but we are in real time breaking records and making a nice bounce. So obviously, I hope you're making some good money on this. Heck, I even hope you made some good money on the downside. Why not play it both ways? In reality, when you take a peek at the S&P 500 heat map, it was kind of hard to miss. Everything was green except for Apple, and I just want to remind you why that happened. Apple shares fall as Tim Cook says very difficult to predict tariff costs beyond June, so that was why we had a gap down, couldn't quite recover, but the rest of the market obviously faring pretty well. To close out the week, the SPY was up 1.5%, so was the NASDAQ. Palantir has not stopped, gaining another 7%, new all-time high, PLTR ripping, and then obviously right now in filming this, Bitcoin is trading just below 96, which is why, similar to Palantir, MSTR just has no chill. It is ripping and ripping and ripping. And of course, I do want to talk about some of these equities, but there's one major one we got to talk about right now, and that is Berkshire Hathaway. Buffett to step down following a 6-decade run atop of Berkshire. Warren Buffett is the GOAT. He is a legend, and it's for good reason. It's because he crushes. Warren Buffett announced that he will be stepping down as CEO. Buffett has been the CEO of Berkshire Hathaway for 55 years. He's the longest serving CEO of any S&P 500 company. You know what's crazy? I read the stat that the average age of a CEO for a Fortune 500 company is 55 years old. As in, he's been running Berkshire Hathaway longer than the average age of the CEO of an S&P 500 company. That's insane. At this point, Warren Buffett is such a legend that he's not just known in Wall Street, he's actually a cultural icon, and it's for good reason. Why there will never be another Warren Buffett? And the answers is because his returns, what he's been able to do, is jaw-dropping. Since 1964, Berkshire Hathaway has returned 5.5 million%. Folks, that is not a typo. You're not mishearing me. 5.5 million% return. A $10,000 investment in 1964 would now be worth $550 million, over $500 million. This compares to a 39,000% in the S&P 500. Buffett has outperformed the S&P 500 by over 140 times. Folks, these are records that are never going to be touched again, which is exactly why he's an absolute legend. And like any titan of industry, there's a reason why there's an entire stadium of people applauding you, a legit standing ovation when you announce your retirement. Obviously, very, very well deserved. This guy's the GOAT. He's an OG, and he's going to be going down in the history books for quite a while. As I was reading this news, paying attention to the conference, and kind of sifting through everything related to what was going on this weekend, I came across this article that I have to admit did make me chuckle. Berkshire shareholders are stunned as Warren Buffett announces plan to step down after 6 decades. How could you be stunned? This guy is 94, almost 95 years old. He's been running this for almost 6 decades, and he's personally worth almost $170 billion, and people out there are stunned that he's stepping down. I think we should be stunned that he's even been going on to this point. You don't see this type of longevity, not in terms of just his age, but his wealth. At a certain point, how do you not just say, you know what, I'm going to go hang out on a beach for the rest of my days? No, instead, he's just in Nebraska doing what he does best. And it's not stunning he's stepping down. It's stunning that he's made it this far. Anyway, a massive congratulations to him, his team, and all the investors in Berkshire Hathaway, because obviously Warren Buffett made you a pretty penny. But as they say, when one door closes, another opens, which brings us to right now, what are we looking at moving forward? What recession? Stock investors expect good times to continue. S&P 500 is now down just 3.3% for the year, reflecting hopes for a tariff rollback. Now, I'm going to be honest. I have absolutely no clue if the market's about to go up, down, sideways, forwards, backwards. I don't know what's going on, but what I can do is tell you all the major things you should be paying attention to have a better idea of where things might be meandering in the near future. So first of all, from the point of seasonality, in the month of May, it is choppy. Historically, as in over the past 30 years, this is not a bullish month. It is not a bearish month. Sometimes it's good, sometimes it's bad, and sometimes it's nothing. If you were to average it out, we kind of go nowhere, then we drop a little bit, then we kind of go nowhere, then we pop. So with this, yes, certain months are very bullish, certain ones are very bearish, and then that will personally, for me, paint my bias of what I'm doing in that month. But for the month of May, and really even in June, it's kind of neutral. And I should note that I'm aware of the saying, sell in May and go away, but I want to let you know from a seasonal standpoint, it's actually not that smart, because then you might start missing out on the summer rally. So I get there's that saying, sell in May and go away, but it's more of like, well, if you're going away, when are you actually coming back? Because you definitely don't want to miss out what is happening in July. And really, we could say that even starts in late June. On more of a granular note, this upcoming trading week has a lot of major macroeconomic events. On Monday, May 5th, we're going to get some non-manufacturing PMI and prices. On Tuesday, we're going to have the 10-year note auction in the afternoon. On Wednesday, we're going to be having an FOMC meeting. That means at 2 p.m., we're going to get the interest rate decision. As of right now, there's a 97% chance that nothing is happening. Not a rate hike, not a rate drop. We're at 4.25%. And as of this exact moment, the market is betting with 97% certainty that we're going to be staying at 4.25%. Most likely this is going to happen, and I can already predict it, that Trump is going to be popping off saying we got to cut rates, and he's going to be very unhappy with the entire central bank. We know that recently there's been some drama, but just to let you guys know, I don't think he's going to be so hardcore. Trump rules out firing Powell while pushing him to cut rates. So he's been on Truth Social all of last week saying we should cut, we should cut, we should cut. But he was on NBC this morning saying, yeah, dude, we're not going to fire him. So I think that's kind of calming things down. But this is my prediction, is that we're going to get no rate cut, which shouldn't be a surprise to any of us. And then from there, we're going to see Trump, who's probably not happy. And remember, that comes out at 2 p.m. Eastern on Wednesday, May the 7th. And then at 2:30, Jerome Powell will be doing a live press conference. And then finally, to kind of get to the end of the week, Thursday, May 8th, we're going to get the normal initial jobless claims. And then in the afternoon, we're going to have the 30-year bond auction. And on top of that, don't forget the fact that we're still in earnings season. To get rocking on Monday, we're going to have Berkshire Hathaway, Palantir, Ford. On Tuesday, Supermicro, AMD, Rivian. On Wednesday, Disney and Uber and ARM. On Thursday, Shopify and Coinbase. And then on Friday, probably ones that you guys aren't so excited about. But as always, feel free to screenshot this. Feel free to go to @eWhispers. I should also let you know that I put all of this in the free newsletter. This has always been free. It always will be free. It comes to your email inbox every single Sunday. I break down the previous week, what to look forward to in the upcoming week. I give you all the earnings, and then I highlight the ones you think you're going to care about most. I give you all the major macroeconomic events, just a little cheat sheet, and then I give you the seasonality for each individual day. So you can see Monday's leaning a bit more bullish, Tuesday's a bit more bearish, Wednesday's a bit more bullish, Thursday's a bit more neutral, and then Friday's just kind of neutral sideways, not really doing so much. Once again, folks, you could get this for free every single Sunday around 10 a.m. I fire this off. I give you all the info. So sign up for that. It's in the description of the video. Overall, expect some craziness. I know right now for the past couple months, we've been in a high volatility environment, and I am not expecting that to change between all of the earnings, all the major macroeconomic events, and who knows when we're going to get an update on the tariff war, the trade war, whatever you're going to call it. All this stuff just kind of keeps us in a high pressure cooker type of a situation. So pay attention to the news, pay attention to the announcements, pay attention to the earnings, but most importantly, stick to your trading plan, and please do not let your risk get out of control. That's what I have for you right now. Of course, if you have any questions, comments, concerns, let me know in a comment below. I'll get back to all of you. Other than that, I appreciate you making it to this point in the video. I appreciate all the good vibes. I'll catch you in the next one. Peace.